Chances are, if you're self-employed or you're thinking about going the self-employed route, one of the biggest hurdles to clear, or the biggest gripes, is around health insurance. You know, it's too expensive to make this work. I don't have any good options. Someone sold me a plan that's not really comprehensive health coverage. I just can't find anyone trustworthy to help me figure this out. So I hear that a lot from clients. I see that a lot online. So I figured, there's probably demand for a video that goes through these options, kind of sets the record straight. So that's my goal here. I want to just clear this up for you. So I'm going to go through the options that I recommend everyone evaluate. There are 6 of them, which is probably more than you thought. These are all, again, options I would recommend, so that's no junk here. So let's go right into these plans. I'll explain the pros and cons of each, and then when you can or can't enroll in them. The first couple of options have to do with group health insurance plans, how you can get onto them or stay on them. So the first option is your spouse's group health insurance plan. So if you have a spouse or domestic partner who works at a company who offers health insurance as a benefit, you can join that plan if you're a qualified spouse or domestic partner. And you can't just jump in next day if you want, but you can get in 2 ways. The first is from a qualifying life event, and that way you can join mid-year. And that's usually going to be, in the case of self-employment, you have a job, you've got health insurance through it, and because you're quitting or you lost that job, you're losing that health insurance coverage. That triggers an enrollment for you on your spouse's or your domestic partner's plan. This is something you have to work quickly with. You go to their HR or benefits department to finalize details on what documentation you need, how to actually do the enrollment, what your options are. But that's a way to get health insurance coverage for yourself. Just piggyback it on your spouse or domestic partner's plan. You're good to go. Add yourself as a spouse. Now, this was kind of the automatic choice for people who did have a spouse who gets health insurance through work. And you can still do it. It's probably going to be the most popular way for a while, but the cost of doing that is not as compelling as it has been. So adding you as a spouse is going to be more expensive than you might think, because companies don't have to subsidize that cost. If they do offer health insurance, they have to subsidize the cost to the employee, which would be your spouse in this case, but they don't have to subsidize the cost for a spouse or children. And with the other options I'm going to talk about becoming more and more affordable, the value proposition of just doing this as your automatic choice, that is adding yourself as a spouse on your spouse's group health plan, not as compelling as it once was, but certainly a good option. The second choice, or I should say before we move on, the second way to get into your spouse's group insurance plan is waiting until the new plan year starts. So there will be an open enrollment, usually a month or two, a couple months before the new plan year starts, which is typically January 1st, where you would make, or your spouse would make elections for the next year. And so you would just add yourself as a spouse at that time. The next option to consider for health insurance for you is COBRA. So this is a continuation of health insurance that you're already on through a company. So this would be more for the case of you are going to become self-employed, but you currently have a job, and that job gives you health insurance, and you are on that health insurance plan. So those are kind of like the qualifiers here. If you quit that job or lose that job, you can keep that health plan for up to 18 months. That's the COBRA regulation. So that's an option. If you know your plan, you like your plan, usually like if you're in the middle of treatment for something and you just don't want to rock the boat, that's why you might keep this. Makes sense. The one con of this is the cost. You're going to lose whatever subsidized amount that your employer was contributing. So you're just going to pay the full retail price of that group plan. It's probably going to at least double. So that's what to keep in mind with COBRA. It's yours for the taking, but for most people, it doesn't really make sense, because the other options that I'm going to get into are more compelling from just a value perspective. So the next one, and this is probably for most people watching this is going to be the right answer, and that is an ACA health plan. So other terms for this: Obamacare, healthcare.gov, exchange, on exchange, marketplace plan. That all means the same thing. And this is the individual federal market for ACA health insurance plans. Kind of a mouthful. I'm on healthcare.gov here. That's where most people go to start. You're certainly, making a good choice by going here and just signing up for an account, checking the market. That's cool. An option I would consider for shopping that I think is a better experience is something called Health Sherpa. It's all the same data, all the same insurance companies and options. The data flows back and forth between healthcare.gov and here. It's just a third-party platform, and it also allows brokers to jump in and help you or do the whole thing for you if you want. And even if I'm just a consumer, I just like the experience better. You don't have to get an account to start shopping for stuff. You just punch your zip code in and go. So anyway, that's what Health Sherpa looks like. A couple things on these plans. When you can jump into one. It's much like the spouse group insurance scenario. You either can enroll in one of these plans because of a qualifying life event. So you've lost your job or lost health coverage, either because you quit your job or you lost your job. You got married, had a kid, got divorced, moved to a different state or something. Those are the big life changes that would open up a mid-year enrollment for you. In the context of self-employed, the most common situation is going to be, I lost employer health coverage, because most likely you quit your job. So that is one scenario. And you can, if you we're in June as I'm recording this, let's say you enrolled sometime in June, your plan would start as early as July 1st. If you do not have a qualifying life event, so you're already self-employed, you haven't lost any coverage recently, then you're going to have to wait until the open enrollment period, which is in the fall. And so that will last, it starts in November and ends at the end of December. Any choices you make will start on January 1st. That's when the plan would start. And so those are your two options to get into one of these plans. A couple things that are great about these plans. One, the Affordable Care Act, which is what ACA stands for, sets a minimum specification for these plans. So every plan, even in the relative, good, better, best of all these plans, they all have to have some features. The big ones are they can't disqualify you from coverage because of a pre-existing condition, and they have to keep covering that condition as long as it's just covered anyway once you're on the plan. They have to accept you. They can't ask you health questions or lifestyle questions and decide whether or not to extend coverage to you based on that. That's not a thing. As long as you've got an enrollment window, you can enroll, good to go. The next big thing is preventive care. So physicals, well women's visits, prenatal care, that's all covered, has to be covered. So those consumer protections are built in to where things that you may expect health insurance to cover are going to be covered. By covered, I don't mean paid for 100%, but at least it's covered. You'll pay for some of it, but it's not going to be not covered. Another big thing about these plans is there is no maximum benefit. So like they won't stop paying claims once you hit $1 million or $2 million, which sounds like a lot, but if something bad happens, disease-wise, accident-wise, bills can rack up to that pretty darn quickly. So having an unlimited benefit in that way is a good thing. So these are good plans. They used to get a bad rap about 10 years ago when this whole exchange thing was rolled out. For the most part, everything has been fixed. And so runs like a well-oiled machine for the most part. If you live in most metro areas, you're going to have a lot to choose from. And so they're solid options. It's the most comprehensive, robust health insurance that's ever been sold to an individual. Technically speaking, that's the truth. Some cons to these plans. The price can be a little eye-watering, but that's all health insurance. Some people think these are more expensive than a group plan or whatever. When you really boil it down, it's not the case. But regardless, it is expensive, and I understand that. You do. This is a pro that I should have added, but it makes sense here. You are eligible for subsidies if you make a certain amount of money. It's based on your household size, where you live, your age, and how much household income you have. That's everyone who works and gets taxable income. What is that total? And so, for an example, a couple of 35-year-olds with two 5-year-old kids, that's kind of a typical example I run. If they make $100,000 household income, again, depending on zip code and things like that, several $100s, I'm talking $500 to $1,000 maybe, would be the monthly subsidy available to that example. And so it's not nothing. And you can see into the low six figures, people are still getting subsidies. So you can check that very quickly with Health Sherpa. Healthcare.gov will help you calculate it too, but Health Sherpa is a little bit quicker to do that. So that's a good thing. Another con that I don't really think it's kind of overblown as a con, but it is a con nonetheless. Most of these plans are not PPO network plans. So in the world of health insurance, a PPO network is like the widest coverage you can get as far as which doctors you can go see. And that's ideal, and a lot of employer plans are PPOs, and everyone likes to shoot for that. But you will find HMO plans, EPO plans, which just all to say it's a tighter network and you need to stay in the network. With a PPO network, you can go out of the network, but even with that, you're going to pay a lot more even if you can go out of network. So no matter what kind of plan you have, PPO, HMO, EPO, whatever else, it always makes sense to stay in network. And so I think that argument's kind of a moot point. However, there's a stigma attached to HMOs, and so you're just going to have to get over that. I don't think it's that big of a deal. But the majority of plans here are HMOs. Got to go to an in-network doctor, so it's very important that you make sure that your doctors are in the network if you want to go keep seeing them. And that brings up another point. Just have an open mind and be willing to change doctors. You're a consumer. You got free choice. If you need to change doctors to stay in network with the plan that's best for you, then that's great. There's nothing wrong with that. All right, so that is ACA plans. Again, healthcare.gov or healthsherpa.com. Again, I think healthsherpa.com is a better user experience, and you can do everything on that you can on healthcare.gov on Health Sherpa. The next option to consider is going to be more for people who make too much money to get a subsidy on an ACA plan. So if that's not you, you can just skip this section. But if this is you, then there are some options with some small insurance companies that basically take ACA plans or an ACA plan and they copy it as far as the minimum benefits and all the good things about ACA plans, but they put a gate in front of it in terms of health. So you got to be healthy to get this plan, and that keeps the cost down. So if you look at ACA options and you don't get a subsidy, you're going to probably look at the price and look at what you can get for that price and be a little disappointed. And so the market has responded with an option that is like an ACA plan, but makes it a little more cost effective for you. And one of those plans, the one that I work with, that I can recommend, is from IHA Health. So their website is ihahealth.com. I'm not going to say anything that you can't read openly here. But basically, you can see for healthy individuals, they really emphasize that. They're going to ask you health questions to see if they would accept you in the first place. So do be aware of that. You can choose a PPO network, which is what a lot of people want if they're paying full freight anyway. And so really good option. May or may not be, what is best for you, but you have this as an option aside an ACA plan. The next thing to consider, or the next option to consider, is a short-term health insurance plan. United Healthcare is the king of this market. They're the king of pretty much any market. They're the biggest health insurance company in the U.S. by a lot. But anyway, their short-term health insurance plans are really the go-to. For the last couple of years, you've been able to buy one of their short-term plans for, as you can see right here, up to 3 years in coverage. So it kind of acts like a regular health insurance plan in terms of how long it lasts. That is ending in the fall of 2024. So I would not consider this for anything but stretches where you need up to 3 months in coverage. Usually you're just bridging a gap between the end of whatever you currently have and being able to have an enrollment window for another plan like an ACA plan. That's how I would treat these. I'm sure there are people who do this and are very happy with it, but I would not recommend just getting 3 months of coverage at a time, then reapplying and doing it over again. There are just better options for a permanent health insurance solution, which we've already talked about. So uh1.com is the website where you'd go, and then you just scroll down to short-term medical, and then you can run quotes and see what might be interesting to you. A couple things about these plans. This is short-term health insurance in general, not just United Healthcare's plans. For the most part, there are some limitations. First, they're going to ask some medical questions to see whether or not you would qualify to get the coverage in the first place. The second is there are lifetime benefit limits on the majority of these plans. So like once you hit 500,000 in claims, they'll never pay a claim for you again, or $1 million or $2 million. And while that's a lot of money in terms of insuring your health as a safety net, it's not a lot. So that's something to be aware of. Pregnancy, normal pregnancy, office visits, things like that are not covered. Neither are preventive benefits like annual physicals, well women's visits, that type of thing. So you've got better options for more comprehensive healthcare coverage or health insurance coverage on the ACA or the plan I mentioned in the previous section. The last option I'll talk about is not insurance, and I'm not specifically recommending this company or anything, but I just want to let you know what is out there, and it is medical cost sharing. The one I've heard the most good things about is Sedera, Sedera. So basically how medical cost sharing works, again, it's not insurance, and so it can't be regulated like insurance, which is a con. But how it works is it's technically it's like crowdsourcing it's crowdsourcing funding for each other's medical care in a more formal manner than like a crowdsourcing website. So it's a community of people who have this agreement to stay healthy, be reasonable when they use healthcare services, so they're not racking prices up. And when something significant happens, there's a pool of money there that everyone's paid into to help pay for those bills. That's it, as simplistically as I can explain it. And so some of these cost sharing plans are faith based. So you've got to be a member of a certain church to get into their cost sharing program. I like about Sedera that it is not tied to a faith. I think that should be separate when it comes to healthcare. But anyway, that's something to be aware of. The cost can be significantly less than regular health insurance. That's the reason you would look at this. But again, it's not insurance. You don't have the protections of insurance law as a consumer, but I have heard good things about Sedera. So that is an overview of the options that you've got for self-employed health insurance. Hope that was helpful. Leave a comment if you'd like to know more, and I'll see you in the next video.